Hello everyone, welcome back. Here is Ali Talibi, and this is the second lesson from Module 15. So we came to the point that you decided to go public. So you prepared prospectus, you found a good underwriter, and now that's the time just to choose the right stock market. So in this lesson, we'll talk about listing on the stock market. Also, we'll talk about additional offering. So what will happen if you want just to raise additional funds after going public? And finally, we'll talk about the reverse process of going public, which is called going private or just private placement. So let's start our session. So when it comes to the stock market, you have several choices depending on the country your major operation is, depending on the currency you are working with, depending on the type of business you are doing, you might choose different type of stock market. Here, I'm just referring to three major stock market. Two of them are US based, so NYSE and NASDAQ, and TSX is for sure is based in Canada. So NYSE, New York Stock Exchange, usually, when we talk about the traditional type of businesses like auto manufacturing companies, petrochemical companies, oil companies, those companies are mainly listed in NYSE. If you're talking about more technology sector, IT companies, you might consider going with the NASDAQ, which is National Association of Securities Dealers Automated Quotations Exchange. That's a kind of long term. Just let's call it NASDAQ. And Toronto Stock Exchange, and for sure when you talk about the TSX, the major currency is Canadian dollar. Some of the companies, they go with dual listing. For example, if you're a Canadian company, you can go with the TSX, and then also you can go and be listed in NYSE or any other exchanges. In this case, you will go with two different currencies, and the ticker will be similar, but not the same. And remember, the listing requirement is totally different. So you have to be careful about the listing requirement. For example, the minimum stock price, the number of outstanding shares, and the financial conditions of the company. All of them should be considered when you are going to be listed in one of any of these stock exchange. I will provide a link to each one under description. So if you're interested to see the full details regarding the requirement, please go there, click on that stock market, stock exchange, and you are able to see the requirements to be listed on that stock market. Now, when we look at the history of these markets, we'll see the kind of huge difference in terms of the performance of the market. As I mentioned, the Nasdaq is mainly, we're talking about the companies which are in the IT sector. So if you look at the green line here, you see that actually it's showing the fluctuation, much more volatile history of the stock market in Nasdaq, and also at the same time you will see the better performance. This is for the last 5 years, so I'm comparing the performance of these three major markets. So the green one, as you see here, is actually showing the Nasdaq. The blue one is showing the NYSE or New York Stock Exchange, and the last one, which is the red one, is showing the TSX, which actually we are using the S&P slash TSX for this market, showing the performance of that. So that's the index for this market. So you will see that NYSE and TSX are performing very close, at least for the last 5 years. However, you will see the huge gap between Nasdaq and two other markets. However, if you look at the history, you will see that the Nasdaq is also much more volatile. And here is the March 2020 that we noticed that the major negative impact of this kind of COVID situation in the market. Now, after you went public, you might consider to sell additional shares to public investors. For sure, you can go with that. In this case, either you can sell directly to new investors and ask for the cash in exchange, which is called general cash offer, or you can ask your current investors, your current public investors, to buy the additional shares. In this case, we'll talk about the rights issue, and they have the kind of priority in terms of buying your new shares. This process is called SEO, or seasoned equity offering. This is similar to IPO because under both scenarios, actually you are raising funds. This is happening in primary market. The reason we call that primary market is in primary market, you are able, as a company, you are able to raise funds. You can actually get cash from investors. The IPO is happening for the very first time. The SEO is any subsequent raise of funds from the market. And whenever we talk about the secondary markets, we're talking about those markets which you are actually listed on, such as the NASDAQ, NYSE, or TSX. So far we talk about the IPO or going public. Now, what if you decide to go private? It means that you're a public firm and you decided to go private, or instead of just going public, you prefer to go with the private placement. So when we talk about the private placement, specifically we're talking about the sale of securities to a limited number of investors without a public offering. So you choose, you target the specific investors and you ask them to provide money, and they will be shareholders of the companies. Now, what are the disadvantages or advantages of this form of placement? For sure, the major disadvantage here is that you have a limited number of investors to work with, so maybe you will have limited funding available to you. And another major disadvantage here might be that the investors cannot sell or resell the security to the public investors or another investor, because as I mentioned, there are a limited number of investors, so the liquidity in this case will be much more limited. What about the advantages? The major advantage here is that you can go with the custom tailor issuance of stock, so you can go with specific terms and conditions. You have much more control on the form of the stock issuance, and there will be much less obstacles and barriers to sell your shares to investors, and for sure that you don't need to deal with all these red tapes and rules and regulations. That's some major advantages of actually private placement. So that's it. This is module 15. The next lesson will just wrap up the session. I will review some major notes, and also I will come back with some questions to review. Thank you very much. Have a wonderful day. Talk to you soon. Here is Ali Talavi.